What's up, traders? Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is September 29th, 2021. Please go ahead, click the like button on this video and subscribe to my channel. Today we're going to be talking about the price action in the indices. It was very mixed, but there's some important nuances to look through today. And I definitely think with where the VIX is and where we are with this, potential government shutdown, we have a lot to discuss tonight, team. So let's jump right into it. Before we go into that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so let's go through headline indices. And headline indices were basically consolidating. So box scores, let's go through those first. S&P 500 is measured by the SPY up 0.17%, NASDAQ QQQ down 0.16%, IWM small caps down 0.21%, and the Dow Jones is up 0.25%. And you can see breadth overall positive, but nothing stellar. We had 58% advancers in the SPY, 60% in the Dow, and then the Qs and the IWM a little bit weaker. And the nuance with this price action, it looks great that, okay, 2 out of the 4 indices were up. So basically just a mixed tape, nothing really big to say about it. But let's jump into the actual charts and let's take a look at some of the nuance. So yesterday, right here we have the VIX. It's at 22.56. So the VIX is incredibly elevated. And we had a big flush out day from the market yesterday where all these indices, they were off. I think the NASDAQ was off like 2.8%. It was something really significant. Small caps were off 2.25%. Really big downside for the market. And for the most part, when we get these big flush out days, you flush out a lot of the weak hands, you flush out a lot of the excess. And then we typically end up getting, a nice red candle in the VIX. And the market bounces and inflects a bit higher. Today we actually did not get that in any of the indices really, and you can see that the VIX is still bid. We put in a green candle on the VIX, trading at 22.56. Let's take a look at the S&P 500. S&P 500 closed up 0.3%, which is pretty good. Yesterday we talked about this H pattern, and I was saying, never interested in shorting into that H pattern or selling into it. And sure enough, we did get our balance today. So that was, I think, the correct decision. But really what I was looking for today was, nice extended range candle that, we flushed out the weak hands. Okay, now the market's ready to move higher. So boom, we're off to the races. But you can see we still closed inside of this downward trend channel. We really couldn't make all that much progress. You can see we had a green candle looking at these futures, but if you look at something like the SPY, which only measures the price action, from 9:30 till 4, this is a red candle for the SPY, meaning that on a net basis, once the market opened, there were net sellers. So this is definitely something a bit different than what we've been seeing, where even after this huge flush, there was still more selling to be done. Like there was really no reprieve. So this is definitely sticking out to me because, of course with the H pattern, I didn't want to be a seller ahead of that, but that's really only if we can get the bounce higher. If we just start consolidating down here and we can't make any progress, then suddenly it looks like, okay, we might just waterfall out of the structure to the downside. So I would definitely say the risk is elevating here. S&P 500, we are exiting September, which is a good thing. September is the worst month seasonally. Tomorrow is tomorrow month end? Yeah, tomorrow is month end. A lot of times, I'm not trying to scare anybody, but I'm just trying to set some expectations. When the market's pretty weak into month end, a lot of times you can just get, literally a flush into the end of the month where, players are taking down their exposure. Players are getting the tap on the shoulder that they need to de-risk, things of that nature. All this rebalancing occurs. So yeah, heading into tomorrow, within the next 24 hours, we're going to get some news from the U.S. government. Is the government shutting down? Is it not? And the U.S. government shutdown, is it the biggest deal in the world? Not really, because we all know the debt ceiling. It's just kind of like this dog and pony show. You know, if the government shuts down, then it'll just reopen shortly after. It's not that big of a deal. But when the market is hanging on by a thread, and you have a lot of players that are underwater, a lot of players that are very on the verge of potential, margin calls, potential having to de-risk, technical trigger levels being hit, etc., etc., suddenly like a headline like that could really impact the market, where it's like, okay, now this could be the reason for the next leg down. So one level that I'm watching is on this hourly chart, this weekly value area low right here at 43.45. I don't want to see the market take out this low over here. I really don't want to see that. I don't want to be a part of this market if we start to waterfall. So that's something that I'm, just very cognizant of for tomorrow's session. Yeah, the other thing about today's session was, we got the strength in the overnight market. Of course, like we were bid in the futures, everything was looking good, but none of that strength really maintained into the session. So that gives me an indication of like, okay, I'm understanding the market psychology, they're not done selling, or so it seems. So that is the S&P 500. Let's take a look at the NASDAQ. And NASDAQ, by far just, the worst of these indices. So the NASDAQ, you can see this one just very weak. Even when we did this H, we actually made a lower low because, with rates rising, that's just not a good recipe for the NASDAQ. You can see when we transition to the next month, we're going to be way below value. So yeah, the NASDAQ, definitely not where I want to be personally at the moment. And then the Russell, the Russell looked very strong. And it was like, okay, Russell catching some bids, catching some relative strength. We might have a nice move here. But if this technical weakness keeps, continues, and we can't get any clarity from the government, even these small caps, are at risk. And I'm pretty overweight the small caps. So, I'm talking against my book when I say that. But yeah, we'll have to see if these can get any strength. And I think a lot of this is going to rely on the infrastructure bill, getting some clarity from Congress. And also, we have those China headlines. Like, there's just a lot of uncertainty in the market. Other big thing that's going on today was the US dollar. The US dollar is just like ripping to the upside. So some of these big variables are moving in major ways, and they're causing disruptions in the market. It's almost like, with where the dollar's trading, where the US treasuries are trading, etc., it's almost like that determines the climate of the market. And let's say, like, when you have the dollar in a certain regime, the treasuries in a certain regime, let's say it's like the rainforest, and there's going to be certain organisms that thrive in the rainforest. But then when those variables start moving into different regimes, then you might go from like the rainforest to the desert. And it's like, okay, which organisms thrive in the desert? We have to allocate to those. And then some of those organisms that thrive in that prior environment, they don't do so well. So it's kind of like what we're experiencing right now. So this US dollar, let's take a look at the weekly chart. And it's pushing towards the top end of a range it's been in since last year. You can see this, so it was, looks like September of 2020. So yeah, definitely noteworthy right there. And then let's take a look at the Dow Jones. Dow Jones actually showed some nice relative strength today. Closed at 0.42%. But even the Dow Jones, it did not close near the highs. And what's good is for the Dow Jones, this was trading below value pretty much all month. Starting, once we're in the new month, it's going to be trading inside of value, assuming it stays, at this level. All right, let's take a look. Let's go a little bit deeper. We're going to go into our heat map. Heat map, you can see we had some strength in healthcare, consumer defensives, utilities, and then we had, continued weakness in the semiconductors. Some of these FANG names still pretty weak, but overall not the worst day in the S&P 500. And then sectors. Let's take a look at what was doing well and what not so well today. So in terms of what was doing great, regional banks up 1.09%. And you can see this aerospace and defense ETF had a pretty decent day at 0.6%, healthcare pretty decent, and utilities. So now we're seeing a move back into the defensive areas of the market. And that to me almost seems like investors are bracing for a sell-off. When they just go, they're like, all right, got to put some money in equities. All right, let's throw it in utilities and we'll throw it in healthcare. So it's not like the most confidence-inspiring thing. And you can see the consumer staples also had a solid day today, up 0.91%. And some of the weak areas of the market, the ARK Innovation Fund got sparked again, down 2.16%. The cannabis ETF YOLO down 3.1%, MSOS down 2.8%. See, a lot of these more speculative areas of the market really got hit. Style factors. High div low vol was our top performer, up 0.94%, which is not very risk on. You know, it's not like what we had the past couple days where, you know, high beta is ripping and all that. So yeah, not the best configuration. Now you can see momentum was down, and we had the growth ETF also down. Okay, so seasonality, you know, we've talked about this where we're approaching the very end of September. And then if you look at the seasonality, you know, beginning of October can also be pretty rough. So, I mean, if we were to get this government shutdown, like a couple of these shoes to drop, you know, could that fit in with this seasonality of, you know, then we bottom out in October? Yeah, it certainly could. So definitely have to be cognizant of that. But if we can make it through this period, then, you know, the seasonality really improves. Okay, let's take a look at my trades for today. I only placed one trade. I got long these XLF June of 2022 38 strike calls. And the XLF, you know, I really like the look of this one. I got it on the dip this morning when it was trading pretty much on the lows of the day. This one trading above the 20-day moving average. And I think this one, assuming the market doesn't waterfall, and that's a big assumption, you know, I could end up stopping out of these tomorrow. But I think if the market is strong, I think these financials could have a very good performance run as yields rise. Let's take a quick look at our 10-year treasury. Okay, 10-year treasury slightly bid, up 0.13%, not too bad. We don't want to see this waterfall to the downside either. Now let's take a look at our options order flow. Looked at this a little bit in our afternoon webinar. Let's go to our VigTech. Dun dun dun. Let's check out our VigTech options races. You can see we got Tesla, SPY, Amazon, Qs. Nothing really too out of the ordinary today. I do see Boeing on here, which is typically not a name I see very often. Let's take a look at Boeing. And Boeing, yeah, it was up today, but also put in an ugly red candle. So it doesn't really look that enticing. And then let's also go over to our Tradescape. I definitely noticed some interesting things going on. Yeah, okay, so this is our Tradescape. This just shows us, you know, some large options flow throughout the day. You know what, I noticed definitely some very defensive positioning. You can see this is kind of mixed, you know, between calls and puts. It actually looks like it could be even more calls than puts. That's not exactly what I want to see heading into a binary event. Same thing here with these SPXW positions. Look at the Qs. You know, everyone was loading up on puts on the Qs today. So yeah, everyone's getting ready for that waterfall. And then what else do we have? EEM. Yeah, it looks like for the most part, put buyers in EEM, which makes sense because we have a really strong dollar strengthening. IWM, you know, players purchasing put options on IWM. They're also getting ready for the waterfall here. You got these December of 2021 puts, January 2022, November. Yeah, they're looking for the market to take a leg lower. And then let's take a look real quick before we close out. This is our CBOE options market statistics. And you can see, you know, the positioning today, or the trading volume, Not quite as defensive as yesterday, of course, because yesterday was like a massive flush. But we did have a reading of above 1 at 9 a.m. And you can see we did have a couple of readings above 0.9 throughout the day. So this is, I would say, like, not super capitulation, you know, fear, but also like a healthy amount of, you know, put buying. So, yeah, you know, as we close out, I mean, if we look at yesterday's put volume, so if we look at CPC, yeah, you can see, you know, we hit a local high, you know, so there's definitely some fear in the market. I imagine today we're not going to come in as high, but it's not like we're going to come in at a complacent level either. So yeah, in summary, you know, it does look like the market is sort of sitting on this knife's edge, and depending on how these shoes drop, you know, maybe we get some really good news out of Congress, you know, that maybe spurs some nice sentiment, whatever. But conversely, you know, if we get any sort of bad news, it really looks like the market is just kind of like sitting on the edge. So for me, if we do get that bad news and we trade below this weekly value area low that I was talking about earlier, I'm going to have to stop out of my long positions. And while that is, you know, never a fun thing to do, you know, it's definitely a necessary thing if the market starts to waterfall, because what you want to be able to do is stop out of your positions and then be able to buy them back lower. You know, you don't want to just be like sitting in them and, you know, in a tough spot. So we'll have to see what happens. You know, this is definitely going to be, you know, a crazy end of the week. And, you know, I was talking to one of my buddies earlier, and I think one thing is for certain. So with the VIX this elevated, and right now it's at a 22.56. With the VIX this elevated, I think there's a strong possibility that we are going to be trading, you know, nowhere near this current level where we are right now, like 43.56. You know, come tomorrow, come Friday. You know, if we were trading, you know, right around here, I'd be like, what? I'd be so shocked. With the VIX this coiled, that either means, you know, we're going to get some relief and the market will actually springboard higher, like, you know, we've been looking for. Or, you know, with the VIX this elevated, you know, we're going to have a vol event. So I think it's, you know, we're going to be moving off of this strike. So with that being said, you know, I'm going to leave you with that. I'm going to be developing my game plan, you know, tonight and tomorrow, just in terms of what exactly I'm going to do in these different if-then scenarios. And I'll be looking for that headline, you know, what's going to happen with this government shutdown or, you know, avoidance of it. So that being said, hope you all enjoy the rest of your evening. I will see you all tomorrow.